fresh from the trading floor, this is Fast Money.
Buy some and tack up the certificate for my kid.
All right, let's get back to the Apple story. With Apple closing at a record high today, can the market keep riding its coattails? Let's ask Aaron Task, editor-in-chief of Yahoo Finance. Aaron, great to have you with us.
Thanks for having me.
What's your feeling? Because, you know, there was the article today about the rally not getting respect, but if you look technically at the markets, it's actually done pretty okay. It went higher, it plateaued, it chugged along a little bit, consolidated, and then went higher again.
Yeah, I mean, I don't think the market itself is riding on the backs of Apple, but I'm not aware of any stock in market history where the entire market was dependent on one stock. When you go back to the early 70s, you had the Nifty 50, and that was people talking about, oh, the market had become too narrow. In the late 1990s, you had the Four Horsemen, and the market became too narrow. If it's all about Apple, then I do think at some point we're all in a lot of trouble, because if so many people are in it, if anything goes wrong, it's going to be Katie bar the door.
Right, and it's actually not all about Apple. I mean, if you take a look at what the sectors that have led us higher, they're utilities, and some staples, for instance. A lot of these
there's
large
a lot of biotech stocks doing well. Yeah, I mean, so I don't think it's. I mean, we're talking about Apple. Obviously, everybody knows the story. It's a great story, incredible performance, but it's not all about Apple. And I think viewers make a mistake thinking, oh, I just got to be an Apple, and that's the only place where money's working right now.
Aaron, a bunch of folks on Twitter were reaching out to me, surprise, surprise. I know you're a big guy on Twitter, too. And they were saying, Doc, take a look at AT&T. Apple is so far outperforming in terms of, you know, the run that it's had, 15 billion in market cap in one session like that. How is that justifiable? And then I look at the real numbers, and Apple does about 120 billion rather in revenue, and it'll bank almost 40 billion of that. You look at AT&T, they do 35, I'm sorry, they do about 60 billion, in other words, half of what Apple does, but they only make 6. So that's why you're getting, you know, that's a slow money trade, the carriers versus the fast money trade.
Well, the few bears out there in Apple will tell you that the AT&T, they're going to stop subsidizing the iPhone, and that's a risk for Apple. It doesn't seem to have caught up with them at this point. We'll see what happens when the iPhone 5 comes out.
Yep.
It's Karen. Let me ask you. Obviously, good to have you here.
Thanks. Great to hear
your work. But on this Apple, I think of it as such a retail icon, and we're in a state of markets where the retail investor is so spooked by the flash crash, or you name it, a number of other things. The Facebook offering obviously didn't help. Do you think that retail investors are relevant to the Apple story now? How big a player
I think
are
they're
they?
very relevant. I think maybe it is the last stock that they have any faith in. And I think, you know, as you're talking about Facebook, I mean, that was really the death knell for a lot of retail investors. So maybe the ones who are left are thinking, okay, Apple, at least I love the products. Some of my friends love the products. I know it, you know, they never miss. And so, again, that's where the risk starts to build up, that if everybody's on one side of the boat, if anything goes wrong, it's going to get ugly in a hurry.
So 665, you've got earnings coming in October. Stock split, yes or no? And good idea, yes or no?
Well, I think, are they going to be added to the Dow? If they're going to be added to the Dow, they might be a 3-for-1 split because it's price weighted and they're going to have to bring that down a long way. Look, you know, Steve Jobs didn't like stock splits. He's not here anymore. Tim Cook did dividends, something that Steve Jobs wouldn't have done. I think a stock split, you can't rule it out for sure. But again, you're just cutting up the pie in smaller slices. It's still the same pie, right?
Aaron, one of the reasons why this market has gotten so little respect, the rally in general, is because it was led by telecom, utilities, tobacco, the types of defensive things we don't want to see. But in the last month, there's been a huge sea change. Banks are up 6% in a month. Utilities are flat. So is that a reason this rotation is broadening out? Is that a reason that maybe this rally deserves a little bit more respect at this point?
Well, I think it does, and I think the big key was what happened in Europe. I think all of a sudden the idea of Europe going over the abyss got taken off the table, rightly or wrongly. So people said, okay, I'm in all these defensive names, and if the economy, the global economy, is not going to come to an end, let's look out a little bit further on the risk spectrum. And so, absolutely, and I think because it's so disrespected, I know you've been talking about this, you can make a case it could have a lot further to go just because so many people are underweighted the market or short, outright short, and getting killed.
Sorry, guys.
Yeah, and they hate it, so they got to get in.
Breaking news here. I see at the bottom of your screen, Peter Thiel sells the majority of his remaining Facebook shares. This, according to a filing that was just made with the SEC. So Peter Thiel, again, selling the majority of his stake there in Facebook shares. This was planned, though, prior to the IPO date. So this was a pre-planned sale of shares, but still in the context now of Groupon today, early investors exiting Groupon. You know, this is very interesting news. Actually, let's bring in Julia Borston. She's on the phone right now with more on this story. Julia.